Welcome, Tim. Happy Wednesday. Today we're back with Tim, aka Chester, from our macro team, and we're gonna go over our weekly macro update for this week. And before we do that, and before I pass the word to you, I'm just gonna run our disclaimer, Tim. 1 second.
Sure.
All right, I'll pass it on to you, and into the macro update.
Thank you, Fabio. Thank you. Hello, guys. Glad you join us today again. If you are new, it's kind of a weekly series now we are starting, and I'm always try to give you a little bit of an update, what happened in the last week, what's up for this week, and also some extra ideas. Share a little bit of the stuff we can provide with all the options data. And usually on Monday was a holiday in the US. Yesterday we had other stuff going on live, and so we are meeting on Wednesday. So it's a short week. The presentation is kind of shortish, I would say. Nothing that much happened this week in terms of macro stuff, if you want to call it like that. Sure, much has happened in the US with the Donald Trump president getting into office. It was kind of impossible to cover all the stuff that's going on, so I just included something that you maybe can have a takeaway here, what happens. But let's go over what happens last week. So if you have questions or stuff like that, put it in the comment section. If something isn't readable here or it's too slow, also give me a little comment and I can maybe improve for the next macro updates so that is enjoyable for you. So last week, kind of simple here with the ES chart. Why the ES chart? Because something pretty interesting happened last week. I put here in a few of the timestamps. I built this chart on on Monday, so it doesn't include the actions from yesterday and today. But last week's CPI was kind of in line. Had inflation was within what was expected from the market, and the reaction was kind of big. This was mainly out of positioning, I would say. We analyzed this a day before, or we tell the people, look, market is positioned like pretty to the put side. People are hedged, right? If there is no bad surprise in CPI, you maybe have this upside squeeze. It happened then. The last days were kind of boring because last Friday was a kind of big options expiry. That's the reason I have OPEX down here. And this was a very, very interesting from a technical side, if you're into options, market action on Friday with kind of big SPX put inventory and SPX call inventory in terms of gags, which was really close to the highest that you have seen on the day after the CPI. So OPEX caused it kind of this move where spot prices has moved over those gags inventories, and then the ES price drifted higher into the expiration of those options. So pretty technical, but very, very interesting in terms of options, how they work, how the Greeks are behaving over time, if volatility declines, like in this case, if volatility would increase on Friday, we had surely a different picture here. But purely OPEX-driven move on Friday. And then as I make those charts, you can already see the first Trump headlines hitting the tape. It was on Monday, kind of in the morning. All is about tariffs right now. That's something the street is watching with eagle eyes. And this led to those moves that you sometimes see, like here in ES. So, also pretty interesting from last week. Well, we are still on the part of what happened last week. Volatility. We had a nice blowout on Monday, which maybe, I mean, you're never sure, right? Was maybe caused to the fact that in the European session, especially bond yields in the UK, the US, Italy, Spain, all these bonds in the EU sector have sold off a little bit, caused a massive up move in their respective yields, right? Because when a bond price decline, the yield will go higher. So we had a pretty big up move in volatility Monday morning during the EU session. It also led to this, I hope you can see it down there, that's a time spread built out of VIX futures. So you compare the current VIX future with the next one, then you can see if it's in contango or backwardation. And actually the spread was positive here. So there was a real high in demand for volatility in the front curve of those VIX futures. Of course, it's also visible in the option space with VIX. But that could lead sometimes to an environment where vol is kind of outblown and pretty high priced. And it's sometimes a sign of that volatility is way too high. Then you can see it got sold into CPI, which is the big red candle here in the middle, or lilac candle. And we have the shenanigans back that are selling volatility, which is nothing new. So a little bit of a driver for decline in volatility was, I mentioned it before, also the lower CPI, right? You can see it here on bond yields below for the USA. 30 years here on the right, they kind of touched 5%. Last week we spoke about the front end of US bonds with the 2-year yield already above federal funds, right? And I mentioned last week also that's kind of unusual. That's something of a sign that bond prices are a little bit too pessimistic and that they maybe have a little bit of a relief rally, right? And that's basically what you've seen since last week, since the CPI. So last week's CPI was the main driver in macro land. Combine this with positions, and you can make those assumptions like I'm doing here. Going into this week, starting with Wednesday today, as you can see, the economic calendar, I mean, looks full, but there's nothing really big in it where we can say, okay, that will maybe cause volatility for equities. It's a little bit different if you are a bond trader. We have some auctions starting today with 20-year bond auctions, but that's something, I mean, it's kind of tradable if you have your idea around it, but that's just something to watch how foreign investors are into US debt that get issued new. So that's just stuff I'm watching for my notes. Then some minor inventory numbers for crude oil, natural gas. I don't know if I have included CL in the presentation now. I don't think so, because yes, last week we have laid out a short. I posted it in the community. I got stopped out one time, and the second short then hit the tape. Everything was good. We spoke about it last week. A thing that the street is kind of watching is the Bank of Japan, right? I don't know if some people are remember about August last year, where we have this surprise rate hike from the Bank of Japan. Back then we have huge amounts of carry trades where you are selling yen to get US dollars. It's not that anymore the case right now in terms of surprises, because now this rate hike, which will happen on Thursday in the evening, is priced in around 85%. That's stuff Japanese swaps are telling you. And that's the reason why I put the prompt down there, next carrot explosion, ? No, because I always see takes on social media. Wow, the world is ending because the Bank of Japan will hike now again. But this time is a little bit different because the market is aware of it. It's priced in. Well, you never know what's really priced in, but with swap markets and short-term interest futures, you can do the maths over there and can actually see what's priced in from market participants. And yeah, for this time, everyone is cool with the hike. If you are an FX trader, you can still watch it because the central bank give always guidance what happens in the next months, next weeks, what their expectations over there, and you can still trade it. 6J or USD yen is one of the volatileest FX major pairs you have. So yeah, maybe watch the screen on Thursday in the evening. So yeah. And on Friday, we have preliminary S&P Global Manufacturing PMIs. They are always coming before the big ones are coming from the ISM, from the Institute of Supply Management. That's economic stuff, giving you some hints how the service sector in the US is behaving and how the manufacturing sector is behaving over there. For me, I always watch service a little bit more because it's kind of 80% of US GDP. So it's kind of interesting what prices are doing over there, what people are paying, right? If you are going into, I don't know, into the cinema, into the gym or everything like that, that's everything included over there. And then we have later on Friday, 10 a.m. EST, Michigan surveys, inflation expectations, consumer expectations. That's all soft data, right? But it's sometimes, I would say interesting to watch what people are think about inflation, how their expectations are. Last week, we also mentioned its earnings season kickoff. And this week, I just included the major things that are important for me. Netflix is always the one that will report as the first tech company, so it's pretty watched all the time. And Friday after the bell, we have American Express. That's also very interesting. It's one of the big credit card companies in the world, right? And you can kind of see how they perform. How are people performing with the credit cards? Are they spending loose or is the spending a little more tight? Oh, that's something you could watch. And also airliners this week, United, Dell, all the stuff, Delta, sorry. And they had a pretty good year this year, last year, 24. We have 2 or 3 days where TSA numbers, so the checkpoint numbers at a security check, have reached all-time highs 3 times in 1 year. It's pretty amazing. Also spent last year significant time in the US and ticket prices are so high. It was amazing. So yeah, that's kind of important for this week. Long story short, the macro side is pretty thin. Earnings beginning to get more and more important. Going over to FX, and with Donald Trump now and all the stuff about tariffs, what is with China, how are the trade tensions between the US and Mexico will get solved, you will always have opportunities there to make a trade. The screenshot over there shows you futures against the dollar, so 6A, 6J, 6S. Also, the Mexican peso is included over there. And you can see if news from Donald Trump are hitting the tape, it usually gets pretty violent. So I also added implied volatility for the futures that you can see on the left-hand side, upper pane down here. And we have already more volatility, I expect, for the Mexican peso in green. That is higher than before the election was kind of priced in, call it like that, in the beginning of November. So the FX market should be pretty interesting over the next months. It's also a little bit dodgy because you never really know what gets tweeted or what hits the news wires, and it will also move your trade significantly. But I have been through this in Donald Trump's first term as well, and a little advice here from me: if maybe size down a little bit. So yeah, don't get wrong-footed by these moves. They can be pretty violent sometimes. It brings us to the Bank of Japan and the 6J. I included some data that we can provide, and also a chart over here. So let's begin with the chart. In FX markets, most of the time, bigger market participants are playing a story. That's the reason why I have drawn this big red rectangle. This is the move that we had, included the last lows down here from the last FOMC, right, from December last year, where we have seen a little bit more of a hawkish stance from the Fed. Of course, 6J got sold in there. We are trading in this big box. Nothing is pretty new. Kinda interesting is the positioning over here. On the right-hand side, you have the open eye, overall contracts, option contracts for the 6J future. And what pops up at first is this massive put interest down here at 50.75 and 50.90. So this is the area down here where you can see in the chart put support HVL, a little bit more down there. Everything below this level is kind of a price level where the Bank of Japan intervened in this market with actively buying Japanese yen, billions of it. We had it in June last year. We also had it at the beginning of April, I guess, last year. It's pretty violent, those moves, because the Bank of Japan always does this when the market is thin, when no one else is online, like 2 or 3 in the morning Eastern time. And this area down there shows massive put support. So, okay, pencil that in. The other one down here is the gamma overall expirations for the future contract that we are watching. And I picked out the area with this little red arrows down here. And that's kind of the area that you can play during a day when the Bank of Japan makes an announcement like they will do on Thursday, right? So those GEX levels are giving you ranges that you can play intraday, right? That's the reason why I added them to the chart above here as well. They will change, obviously, because if the spot movers, gammas and deltas will move, and if time goes on, gammas and deltas will move as well. So they will change. But the biggest ones will usually stay in place because they are so big, we can make an assumption that some bigger capital is in there, some bigger hedges. Options on futures for FX is kind of thin because most of the hedging is done by swaps in the industry, right? If you are long the yen for like 500 millions. We have swaps out of 1 or 2 years as a hedge that nothing can hurt your portfolio or P&L that much. But with the options levels, it works pretty good, I would say. Also had a few trades in 6J since the beginning of this year and kind of worked out. So 6J, the future here is kind of equal in positioning. So market participants are not awaiting that much of a surprise in terms of spot movement, because we talked about it 5 minutes earlier. The market is aware of this hike. Just want to point it out. If you are on the screen and you have a news feed open, or maybe watching the statement from the BOJ and your Japanese is pretty good, listen to them, and yeah, maybe there's a trade in it. Like, yeah, we do a hike, but it's maybe the last for this year. Well, 6J short, why not? Think about it. So, and we are coming kind of to the end. Told you it's a little bit short because the week is so short, but really interesting, to be honest. Netflix in the evening yesterday. So I added a Netflix chart on the left, and on the right there's the earnings statement. To be honest, I don't care that much about EPS and all this stuff. It's a book that I never read, to be honest. But what matters for me is the positioning in the stock. So we have to talk about why Netflix makes a $100 move, right? After the close. That's the big question over here. So now you can say, right, after the close, market is thin, right? Not that much volume, price can move. Yeah, you never know. It's kind of right, but you also have this, and we will go through it, and I hope in the end it's kind of clear how this move maybe happened. Let's start on the left. That's the MenthorQ matrix over here. What you can see here is for the expirations, like 21st of January or the 7th of February over here, how gammas and how deltas are distributed in this expiration, right? It will always update it in the end of the day because the stock price is moving, and also those numbers will a little bit move, and also the open interest will change from options, which will also change gammas and deltas. The table is much bigger with put, call, open interest, expected moves over the day, but I have to crop it a little bit here. So yeah, but it's in full scale at the dashboard. So total exposure over here, that's everything what's online in the options chain to all expirations, like, I don't know, 26 or something like that. It's pretty much. And as you can see, gammas are positive and deltas are positive. What means this? First of all, it's kind of volatility dampening, right? There is, in theory, not that big move because delta is green and gamma is green. People are kind of positioned to the upside more, let's say it like this. To keep it a little bit more easy and a little bit more accessible for you, if those numbers are green, everything is good. Don't expect that much of chaos. But we had earnings, right? And as you can see on the earnings day, it's actually kind of negative. And also the next expiration until end of January, it's also negative. The other ones are pretty thin, so we can't make an assumption over here, but these two are really important. Why are they negative, right? Because maybe people are aware of the earnings and they think, okay, let's put in some hedges, right? We are up, I don't know, 50% on Netflix since last year. Let's invest some, let's say some puts. So we are on the next pane in the middle over here, net gags, for the next two expirations of Netflix. This is the 21st of January, and the right chart over here is the 31st of January. Let's say people down here are the red bars, which causes the negative flags. Those are the put buyers, okay? We have to look in a little bit more deeper and a little bit more granular to find out if a put is bought or sold, also for a call. But the gamma is negative over there. And what's even more interesting, on the upside, you have major strikes, which are green. So it could be that the spot price is so near at those massive green bars that the gamma is already at peak, right? Remember, gamma goes up, but then it makes a slope if the spot price is at the strike you are trading. It does not get much that bigger if your option is in the money. But the spot is really, really not that far away, but it's far away. So it could be that the open interest at the strikes is pretty high actually, because then the gamma is high because of the high open interest, not because the spot is near of the strike that are people actually trading. Which brings us over here to the open eye overall. And as you can see, 900, 885 is pretty big. Also $1,000. I mean, it says 1,005 here, but it's actually 1,000. The scale is a little bit off here, but don't care. That's the biggest strike overall. And I mean, you can open up a chart now and can look where Netflix is trading, right? It's like 998, so $2 off. Does not mean you have a trade where you bought like on Tuesday or last week, Friday, a call, 1,000 strike call for Netflix, right? That's a little bit too, how you say in English, that's a little bit too lucky if you get there, and it's a little bit too big of a gamble. But you can also look at other stuff, and in the end, we maybe can find out what should you have done over here. So let's go down on the left side, SQ, right? SQ, long story short, makes measurements of put versus call costs, right? So if costs for puts are getting higher, it's usually a sign that people are buying more puts, right? Because the demand is higher, and so the price of the put is getting higher. It does not mean that the underlying, which in this fact is Netflix, has to go down as well, right? Remember, options are usually designed for protection, right? We use options for trading, and I'm pretty sure some people are using them for gambling, but was originally designed to be insurance for your stock. And it's kind of interesting if you look at the 1 month skew for Netflix down here. There's a pretty big red candle with the skew making those highs over here. And what I always do then, I compare where is the spot trading compared to the skew today or yesterday with the last recent high or low. And we have a lower skew right here. So keep in mind, the skew is already lower. Price is nearly at the same area where the skew was as this high, and we have earnings, right? Usually you would think before earnings getting posted, people are buying puts as a security, and the skew would be, pretty elevated or pretty high. Not in this case. Usually you never know what's happened in the stock, but and no one knows how earnings are playing out. But those are the technicals that options are saying us. And what also people are using in the community is our 5-day swing model. I just added it here because it gives a little buy signal on the 15th of January. very lower swing band for the options model was hit at around 813, 820. And it's also usable in your process, or if you want to build a process in options investing or in markets, because it combines more stuff, and it kind of, not say makes the work for you, but it combines different models. So I just added it down here to see that we have the upper risk target also in the nearly $1,000 area. And it's kind of interesting that Netflix yesterday after hours make those big push. So because what happens over there, the market was okay with these earnings. I just have seen subscriptions was, I don't know, nearly 2.5 twice as big as expected. I am not that much into single stock trading, but I think that's a good sign. And what happens over there, if the spot goes up, all those open interests on the right side here, they gain deltas, they gain gamma, right? And if we are making the assumption that also a market making has to happen over there, where market makers maybe have the option or have the stock, they have to buy the stock then to get delta and gamma neutral. This is stuff enforcing those moves to the upside a little bit more, because keep in mind, a market making desk is not there for making profit out of movements in the market. They are there to ensure the market is working properly and that you have a bid and ask in a security or whatever else asset. So this is enforcing then over there. And it was pretty interesting that those big gag strikes over here 1 day before, 2 days before, they caused a little bit of this squeeze, because there was this pretty long gamma positions from the market participants. So short gamma at the market maker side, and then they have to buy the stock or maybe buy another option to hedge them out. Yeah, and this is part of the reason that you had those pretty big squeeze after market, right? Of course, after 9:30, everything could happen with the stock. You can see people saying, okay, I'm going out of my options trade now. Then, of course, the opposite happens, right? Short from the market maker has to be closed as well, because they don't need the hedges anymore. And you can see a drop like $10, $15. Who knows, right? That's something you have to overwatch all the time. And yeah, what's the trade here? We can't make advice, of course. It's not allowed. But I usually look into something like this, and then I take options like 2 weeks, 3 weeks out, 25 deltas, and then let's see what happens. But keep in mind, those earnings trades, they are highly speculative, right? It's really hard to look into one specific company, make your analysis, and say, okay, I'm bullish, or right, I'm bearish here. I'm pretty sure most of the people that you are seeing online posting their P&L then after a move like this, they do it out of vibes. They are not that into the business or the field of the business that the company that reports is doing. So keep in mind, this is really dangerous. But from a technical side, what we are seeing here is really interesting, right? Well, because you have a general bullish outlook, a little bit of hedging because due to earnings, but the hedging seems not that to be expensive. If we look at skew, then you have this massive gamma delta positioning on the upside, then good earnings, spot price moves, and the magic of options hits the tape, and Netflix is $100 higher in a matter of minutes, right? So, and the stuff over here, it works for indices pretty the same way, right? Options are kind of moving always the same with the Greeks. But yeah, that was the little excursus into Netflix and what happens after the close if the earnings are pretty good. Right. Have seen it, short one, 35 minutes. If you have questions, guys, let me know. Yeah, Mike uses options for speculating, not gambling. I know that's how it should be, but you have always people out there posting massive, massive returns. And I just can say after all the years, don't get misleading, guys. It's still hard, pretty work to make a good call.
Yeah, thank you, Tim. This was awesome. And just for those who might not know all of this, if you guys are interested in learning more about all the charts that Tim has showed you, you can find them on MenthorQ.com. All the models are available for our users, and we have a swing models, we have a skew, we have more exciting stuff coming also in February. So stay tuned. And today we're gonna do a really nice live session on our integrations. So later on today at 6 p.m. Eastern, we're going to talk about integrations, and we're going to talk about some new development that we're doing. So stay tuned. It's a question for you, Tim. I don't know if you want to take this.
Yeah, if I am into intraday trading, which I usually just do around economic numbers and stuff that happens in the market, I do, yes, of course. Sometimes you have the case that some levels, like in ES or in Q, are pretty narrow, right? So this is the area where liquidity is, which is really important because options open interest is also always liquidity, and you can see it if you trade futures. And if you have like in ES, GEX1, you mentioned it, Mike, GEX1 and a level like a put support over there, it's more valuable, this information, because it can act more as a support, right? If you want to trade along and the price comes down to the levels I mentioned, that's stuff I'm always looking to. And usually your GEX levels are always moving because mentioned it earlier. If spot moves, deltas and gammas are moving. And of course, this also gives you a little bit of a bias, right? If those levels are moving higher, you can make an assumption like, wow, at ABC, XYZ, they are bullish, right? But it's just a part of the puzzle. If GEX levels are going higher, it does not mean that the market has to go higher. Just the open interest out of the options market is getting higher, right? Oh, one day min max going above or below insights. I don't know if you are in the Discord for MentorQ. I've written a paper about this question in my channel. If you have a strong market movement that goes beyond the daily levels, I always suggest to look at the net GEX open interest for your asset. Can you go at the thread thingy, Fabio?
Which one?
Macro, the channel subscription over there. No, up.
This one, right?
You find it? No.
Sorry. I think I got it. Can you hear me, Tim? Yeah.
Yes.
And also, like one other thing, like we now have intraday levels, so the one-day max and minimum would change at the open as well. Would be reflecting the price action for the night. So
yeah, but we have wrote something, and beyond those levels, it's always good to watch the net GEX charts which looking into gammas and deltas overall beyond those one-day levels. And 2 weeks ago, we had 2 times, with NFP and ISM prices where this played out, pretty in line, I would say.
Cool.
Yes.
Awesome. All right. Thank you, Tim, as always. And thank you guys for watching, and see you guys later, and see you in the chat.
Yes. Thank you so much for attending, and have a good day.
Bye, guys.
Bye.